Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday. We have made it to the end of another week and the start of another Digital Currents. How are you doing?
Yeah, happy Friday-ish. I mean, my team didn't make the tournament. My second team, blew a huge lead last night and is out. Although VCU always seems to play better in the tournament, whatever. So I'm officially on the Michigan bandwagon. I got my dark blue on, so we're kind of semi-matching. You're wearing black and mourning for my Tar Heels. It was disappointing. Although with the rest of my reveal, maybe I'm supporting our partners' alma mater. So I got the Bitcoin orange, orange and blue for Florida. I got the roller coaster sock game. It has been a roller coaster of emotions around here for March Madness. But the Gators, it's hard to imagine that they could win back-to-back again after doing it in the 90s. And, we'll see.
Mark, have you heard of a Calcutta style auction? So at our office, we've got the office pool, and that's always a ton of fun. With some of my former buddies, or current buddies, former B school buddies, we do this thing every year called a Calcutta style auction, which for those that don't know, is basically you pick a team and there is an auction that occurs, and to the highest bidder basically goes a share of their winnings. And then there's a total pot, and you kind of divide the pot by the share of the wins. So of course, so far I picked UNC. So I paid was $60 for them. So that's a loss right now. And everybody knows that I'm the Michigan guy, right? So immediately when we got to the Michigan pick, and they're doing well this year, somebody of my friend, who shall remain nameless, Stratford, ran up the bid immediately. $200. Yeah. Right. So Mark, to your point, we are rooting for Michigan in this house because we are already in the hole for UNC, and we're hoping for a turnaround. Just like our markets.
Just like the markets. And, to that, GM, for those who still practice, and by markets, you mean the Bitcoin market, right? So look, Bitcoin is interesting. We've got a little recovery today. Again, the roller coaster ride, it has been crazy. Last week, we were up as high as 76, dropped all the way back down sub 70 or a little above 70 today, down a couple percent, still up 5% for the month. So whether we made a durable low around 63K, we'll see. I probably am in that camp. And we have made now a series of 3 higher lows and 3 higher highs. So that looks like an accumulative pattern. But we'll see. I feel there is a school of thought. I saw someone tweeting about this, and it actually is real. So about this point in the previous bear markets or crypto winners, whatever you want to call it, you have this kind of return to normal recovery before the final drop. And it's pretty tight, on terms of numbers of days since the halving. But I still come back to the fact that in all the previous bears or winters, there was just much more leverage. There was much more gambling and just excessive leverage that needed to be squeezed out. And that's what causes those big flushes. So I'm not saying we're done, and I'm not saying we're going back to 125 anytime soon, but I do think the path is forward-ish. There's more accumulation than distribution. And, we'll talk a lot about it, I'm sure. There's so much going on in the world that is favorable to increased money supply, increased devaluation of currencies, increased kind of global fractioning into regional currency blocks. And so this idea of of a, a true kind of borderless nation stateless currency makes a lot of sense.
No, Mark, to pick up exactly what you were mentioning, this is a big topic right now to determine that correlation, or what's being described as the decoupling of Bitcoin performance and the stock market. So whether it's from oil to equities and gold, there's a lot of these geopolitical turmoil that have an exact direct impact on those said assets. But, as we're seeing this 5% increase over the past month, S&P 500 is down in the same kind of trend here. This really is kind of this long-term, caution that we've seen that BTC could eventually, shake its correlation to the stocks and behave more like digital gold or the safe haven we were promised, right, Mark?
Well,
and really, as we've seen,
absolutely. So I tweeted this yesterday that, it's funny to me how anytime Bitcoin has a little rough patch or gold has a little positive patch, Peter Schiff is back just polluting my timeline. Peter Schiff has been absent. Like, people are saying other people in the world are missing. Has anyone checked on Peter? I mean, he's gone missing. I haven't seen hide nor hair from this guy. And it's interesting, gold is down a decent amount. It's down about 7-ish plus % since the war started, or conflict, or whatever we were going to call it. Since Congress didn't declare a war, but the president, kerfuffle.
Kerfuffle.
Yeah. So the hey, I got a hunch from my son-in-law conflict. So anyway, but stocks are down, bonds are down, gold is down, silver crushed. I mean, silver's down, closing in on 20%. I mean, it's bad. And
wow,
look, those assets all were stuck in a massive short squeeze. This is just normal kind of, settlement after that. They got, to silly levels, but we'll see what happens. But Bitcoin is a safe haven in times of stress. Like if you are in Iran and you can't get access to dollars or yen or euros, and you can't spend your dinars because they're not really worth very much, the value plummeted, you are better off turning it into either Bitcoin or stable coins. But Bitcoin was the big thing. They were mining a lot of Bitcoin. There was a lot of Bitcoin in circulation. Same thing in Turkey, same thing in Venezuela, same thing in all of these places where turmoil can rapidly steal the wealth of the masses. This is a true safe haven asset, and it's equally scarce to gold. I'm not saying gold isn't valuable. Gold is valuable, but Bitcoin is more divisible and more portable. And those two things make it superior. That and the fact that it's a third-party ledger that is permanent, immutable, and truth. We don't have to trust that somebody is holding the gold. Like, still no one knows. I mean, someone knows, but they're not telling the rest of us how much gold there is in Fort Knox, right? We last audited it in 1947, I think, or something like that. I mean, so you're telling me there's this big bunker and maybe it has a bunch of gold in it, maybe it doesn't. That's a weird dynamic versus.
Agreed. More. If Die Hard has taught us anything, if Bruce Willis has taught us anything in Die Hard with a Vengeance, it is not the largest reserve, right? That would be in New York City.
Amen, baby.
I only say
amen. The best Christmas movies going.
Let's go to the math, right? Exactly. Let's go to the math, right? And so this idea, Mark, called the correlation coefficient, right? It measures how closely two variables are connected. So let's say if we take on a scale of -1 to 1, basically once you're higher than about 0.5, there's have to have a positive correlation, right? So since February 24th, why February 24th? It seems kind of random, but let's say at that point, BTC and stocks had a pretty high correlation, 0.7. So since that point, about a month ago, it's declined to -0.54. And that's a pretty big
It's a massive shift.
And so that's
and 24th is logical. That was the last day the market was open broadly before the bombs started flying.
Bingo.
But
Bingo.
It's totally logical. The thing that people forget, correlation coefficient for Bitcoin against equities over any long-term period, and even monthly numbers, it's just a bogus number, right? 30 observations is not enough to have a real. So you need hundreds of observations. But over the long term, it's 0.15 to stocks and 0.00 literally to bonds. And so that is an uncorrelated asset. And it's uncorrelated for a very important reason. Stocks and bonds are relatively correlated, not super correlated, about 0.3. And all different types of equities are highly correlated, 0.7 to 0.99 are highly correlated because they generate their returns from the same things, from inflation, from earnings, from interest rates, and from economic growth. And so those things have nothing to do with Bitcoin. Bitcoin is driven by the technology itself, right? The adoption of the technology by the network, by regulation can impact it, certainly. And it isn't dependent on things like interest rates or GDP growth. A company can't profit unless there's business activity. So deglobalization, lowering profits, rising oil prices, lowering profits. All of those things, tightening credit conditions as the credit bubble the private credit bubble is starting to implode. Defaults have reached 9%. This is looking very eerily similar to subprime. Now you got Goldman Sachs selling hedge funds, credit default swaps against it, just like they did in subprime. And it's kind of like the whole, if you have to post an AI video proof of life, maybe something bad happened to the person. And I don't wish ill on anybody. It just appears to me, if you have to, it's like the Shakespeare, the lady doth protest too much, methinks. I mean, if you keep saying it, it probably, we kept saying for UNC, oh no, they're a really good team without Caleb Wilson. I mean, they're all nice kids. I really like them, and they are good players, but they're not a top tier team. They're a perfectly fine team, but with Caleb, they could have gone deep. But if you have to say it to convince yourself, it's probably not true. And
we love Elliot Cano, by the way.
That's why I'm on. Even though Elliot kind of denounced us and said he didn't like us anymore, and because we didn't pay him enough money, and it does make me crazy that the sport that we love, right, college athletics, has turned into this ridiculous money grubbing bidding war. I'm a mercenary. Carson, what's his name? Didn't even go to class. He says he went to online classes. Baloney. Didn't go to class for 2 years and played college football. That's wrong. On every level, that is wrong. And I have nothing against Miami. I'm totally fine. Or you're just sore they beat you. No, I'm not. You play games. Sometimes you win, sometimes you lose. That is wrong. He's not a college athlete. He has no business playing if he's not going to school. Like even the fake, not fake. There are some kids who do go get graduate degrees. They do. But lots of them, they're kinda. And I'm not into kinda. I want to go back to colleges for college, and scholar athlete means scholar, then athlete. And well, I know, but those days are gone and I get it. So stop whining, Yusko. Fine. And I've no avarice toward Elliott, and I want Elliott and I want Michigan to do well, even though it hurts me to say that as a domer, but no, I'm just kidding.
Mark, I know we must be doing this show a long time if you are wishing old Michigan to kind of survive and advance. And I think that we've got a draw that might make that possible. But Iowa State, I think will be a tough matchup. But yeah, your larger comment is certainly, everybody has turned into, remember that movie with Will Ferrell, Semi-Pro? Everybody's
Oh
turned
my
into Jackie
gosh.
Moon,
Yes,
because
exactly right. Yeah,
they're
show
all
me.
chasing
Well,
the
that's
bag,
from a
Mark.
different movie, but
But
show me the
maybe,
money
yeah,
is now all that matters, and that's
exactly,
just
Jerry
sad.
Maguire.
It's just sad. And look, a
Yeah.
shout out to one of the last great scholar athletes. I mean, there are plenty others, but Seth Trimble at UNC, stayed for 4 years, and again hit the killer shot against Duke, our one highlight for the year, but which was an all timer highlight. I mean, that he will never buy another
Oh
drink
yeah.
in a bar ever again. I mean, it is.
And that's part of the charm, right? That's part of the charm with college athletics. You've got relatively smaller towns and a big market, and you've got the name recognition that if you're a pro athlete, you don't really have in the same way as if you're a big college star. But maybe on to the point, Mark, where you're talking about this, negative correlation, but in the kind of the short term now, as far as like some of the reasons why we've been up on the BTC side relative to stocks. They're kind of like three that I can think of, Mark, and I'd love to see if you had others or your thoughts on it. Is one, you're starting to see some inflows come in on the crypto ETFs after a lot of steep declines. So you had over 760 million in inflows. That's dominated by BlackRock, of course. And then you've also seen the crypto treasury funds. Remember them, Mark? They have now begun to start buying again. We've seen Strategy had some big buys recently, around 2.8 times the rate of newly minted supply, which is kind of creating a big shift. And then this is the big one that I thought was kind of interesting. We've had a little bit of a flip. Basically, now we've seen that this resilience is caused by retail investors being the sellers and institutional investors replacing some of the buying and the demand. It's kind of
No, it
interesting. That's a little
is.
bit
It is.
backwards from what we saw
And
on the
it's
on Mark.
and it's such a huge positive. And I think all of those things that you described are exactly why we have this accumulation pattern, right? When the smart money institutions are the buyers, and this is a term of art. I'm not criticizing retail investors. This is a term of art. There's in the literature, the financial literature, people study the smart money, institutional activity, and the dumb money, which is the day trading, retail, kind of news oriented. And maybe they are unkind to call it dumb money, but whatever. And the dumb money did get its retribution with GameStop and Roaring Kitty. Although, man, the apes and AMC, whew, that has been ugly. So, but I absolutely think there is a step function change in just acceptance, belief, and this accumulation. Now, is it enough to offset, some of the, the nuance in there is some of that institutional demand isn't fully demand, but at the end of the day, this is an inevitability that we've been talking about, as long as we've done the show and before, that this is not something that is suddenly going to go back in the genie bottle, right? This technology was unleashed on the world. Satoshi Nakamoto, he, she, they, whatever, whether it was the NSA or the CCP or Putin or who, doesn't really matter. The technology got unleashed, and it didn't have to get adopted. That's the interesting part. Like from 2009 to kind of 2013, 14, it was touch and go. I mean, a couple people bought some pizzas with it, and a couple people had some, and a couple kids were mining it on their laptop at college, and all kinds of crazy stories. And it's funny. It's funny. I went to this, and I missed it this year, and I'm very sad. There's an event out in California called the Upfront Summit, and Mark Suster runs this firm, Upfront Capital, Upfront Ventures. And they had this big event out in LA, and it's just a great meeting of media and entrepreneurs and venture capitalists. And I love going to it, but I missed it. And a couple of years ago, they did this skit, and they had this, Mark was interviewing these three Bitcoin billionaires. And it was so funny because they had, on all the doors were blocked by these big bodyguards, because these were people at risk, right? And and they were telling their stories. And one was, well, I was a cryptography student at university in Germany, and we were studying this thing, and I bought a few, and now it's worth $2 billion. And then there was another one that said, yeah, I'm not proud of it, but I was running drugs on Silk Road, and I got some change back from a transaction. I didn't sell it, and now it's worth $1 billion. And then suddenly, and this is so funny, they jump up and they jump into a flash mob dance, because it was all fake, right? They were just saying, here are the narratives that people either were a cryptography student, running drugs, or some other way, but they didn't really kind of know that Bitcoin was going to be a big thing. And I think back then we had no idea, but now that technology is so profound that it is here to stay. And I think we've talked about this. Humans are gonna human. And prices, when they move, they attract attention. We've talked about this too, right? Mostly guys, we're the hunters, and our eye follows movement. Like if the lawn crew guys show up, because I'm gonna see movement outside, because I got to be ready to go hunt. And when the price starts to move, which is kind of built into the code, which was the genius of Satoshi, people are going to come, and then it just snowballs, and then we get to prices that are silly, and then we have to have a crash, and that's what creates the volatility. Because when the price gets really, really high, there's a whole bunch of doubting Thomases and Thomasinas that are saying, no, that's stupid. And then some of them go short, and that causes the cyclical. But at the end of the day, when you look back, this is the cool thing. There's, every major holiday, this chart comes out. What was the price? It just happened on St. Patrick's Day. What was the price on St. Patrick's Day every year? And if you look, other than one, every St. Patrick's Day for 17 years, it's been higher. That's kind of interesting, right? Despite all the ups and downs, if you just took a snapshot on that day, it just goes up. So it's kind of cool.
Right. And Mark, usually, as you know me, I love putting a quote where it can be kind of helpful to the conversation and spark some conversation. This quote is not that. So I'll close the segment by saying that in a quote from one of the COOs of a large crypto exchange. Yeah. I'll not name him to embarrass him on our show. But basically, let's see if I can get the quote right. In kind of putting a bow in terms of where these markets are headed and what could be next. In the quote, it says, quote, if the conflict looks as if it's drawing to an end, Bitcoin could very easily recover well and retrace back towards the 100K mark. If the conflict is likely to drag on, Bitcoin could dip back to the 60K mark. Yep. So I don't think that is precise as some of the insights we've had on our show. But Mark, I guess maybe pulling it quote, out into the
right. So wide you could drive a truck through it, and it's like
right.
Those are not that helpful in the sense of what's the weather? Well, it might be 80, it might be 40. Well, that's not helping me. If I want to dress appropriately. So, but what's interesting about that quote is it's not, it could go to 100 or it could go to 0. It's not, it could go to 100 or it could go to 20.
Correct.
It's not,
Correct.
It's 60 is an interesting level. And we've talked about this, right? The Bitcoin has never, I don't want to jinx it, so I'm going to touch wood. So it has never traded below its electrical cost of production, which makes perfect sense, right? Why? If you're a miner and it costs you X to make it, you probably need Y to sell it, right? If it's less than X, you're just not going to sell it. You hold it and wait. And so 58, 59K is the electrical cost. Now there's an incremental cost for the machines and the rent and insurance and all that good stuff. So that cost is higher, and we're below that cost, which doesn't last for very long. But just the pure electricity cost is a pretty interesting floor. And again, given what's going on in the world, electricity prices are going up. And this is maybe the perfect segue into one of our other topics on AI, is the demand
100%.
for electricity from these data centers and the amount of money that people are pouring into data centers. And, it's funny, Jensen, at NVIDIA, he's an amazing salesman, right? He's convinced everybody, just buy more GPUs and you'll be awesome. And so all these guys are racing to say, well, I get the most GPUs. And what was interesting is Microsoft, and look, I'm not a Microsoftie, and mostly I'm just bitter because unlike my friends growing up, I didn't go to work there. They did, and they're happy. And I mean, I'm happy, but they're super rich. No, I'm super happy. No, look, I'm so blessed. I'm so happy. I love my life. Everything is good, but they're super rich. Like, and it's, and not that rich is everything, but it's kind of funny. And there are lots of stories, right? There are a lot of rich people at NVIDIA, lots and lots. So the key is that Microsoft released this week a way of doing a 100 million parameter model. I think I have that number right. I think it doesn't matter. Maybe it's a billion. I think it was a billion parameter model on a single CPU. And you're like, whoa, no, I thought CPUs couldn't do this. Like, well, they changed, and it can be better if I could remember the exact term, but there's in memory, right? There's two types. There's the high bandwidth and the DRAM. And part of the problem of doing inference with GPUs is this thing called the memory wall. You got to move the data back and forth, and you need so much memory for every GPU that's just not enough. And there's a speed problem. So these guys said, well, why are you doing that? We can use it's like a sampling technique. So they're taking, and I'm going to get the order of magnitude approximately right, but it's like 1,000 for the traditional GPU and HBM, and like 1.58 for this other, I don't remember what they call it, a bybit or something like that. But that's an extraordinary thing, because if we can load these models on our laptops and run them on CPUs, that's far superior than building a data center and having to pay every time we use it. And worse, right? Every time you type in a silly question to the AI tool, because it's not AI, it's an LLM. Every time you type it into an LLM, AI is a much bigger thing than just LLMs. But every time you type a question in the LLM and you send it to ChatGPT, they spend $3.68 to get $1 of your revenue. Like that's a bad business model. And somehow they're like, well, we'll make it up on volume. No. Oh, somehow we'll make it up by selling at. No. But but the point of that is, if you have to spend so much to get that, there's something wrong. And you got the electricity use and the water use and all this stuff. And so I would just think the migration to these other ways of doing it would rapidly accelerate. And I think that's going to happen.
Yeah, no, well said, Mark. And I think you're describing the BitNet.
BitNet, thank you. Which, not Bybit. Bybit is the crypto company. BitNet.
Yeah, no, you nailed it. And I think the idea there is that, it could actually even go up to 2 billion parameters. And, what I thought was pretty crazy with some of the stats is that, what this is trained on, the data set is 4 trillion tokens, which sounds like a lot, but maybe for people don't really understand, what does a token really mean? It's equivalent to like 33 million books, right? So basically a large amount of information, but that can be run on locally, including on our Macs, like on the M2 chip, which is a popular one. And this could kind of shake things up. So maybe to your point, Mark, this is what old Jensen playing 3D leather jacket chess would say, that we have actually quietly built
one of the world's largest and fastest growing data center businesses. From our friends at Mellanox, that was a pretty good acquisition back in the day. So for $7 billion, now it's now generating $11 billion, not for the year, but last quarter, Mark, and over $31 billion annually for the quarter, right? So this is really kind of putting them in another set to differentiate themselves from competitors, because I, maybe like others, was starting to believe that AMD was starting to creep up alongside of NVIDIA to kind of challenge the GPU supremacy, because we've seen kind of an announcement, I'm sure you did as well, with Samsung, that they've signed some strategic MOUs to expand AI memory compute. And so, they're kind of figuring out ways to remain relevant. They're selling parts of their business. But by the way, when we kind of malign, if AI kind of slows down and Jensen sells fewer Blackwells, well, he's already also building up the data centers, which are not going to go away anytime soon, because I have still to meet anybody that deletes photos that they take of their children or of their dogs or really of anything in bursts, because
but you know what's going to happen, and again, this always happens, is will some kid, some 15, 18, 19, 20-year-old kid is going to write compression algorithm that takes those big photos and compresses them down so they fit in a smaller space and we need less memory. And so I'm actually pretty bearish on the CapEx for big data centers. I don't think we're going to live in a world of these big giant, racks of servers in these big warehouses that chew up all this electricity. We got to build a nuclear power plant next to them. I actually think that's not going to happen. I think what's going to happen is the innovation around chip technology and memory technology and the way we even intersect. I said, we've talked about our companies that are doing in-memory compute, so the electrons don't have to go very far. We've talked about photonics and the fact that, geez, if I can transfer the data with light instead of electricity, then one, I don't need to cool it. And two, the speeds are so much faster that I can have, smaller footprints and I don't need the giant data centers. And to your point on the pictures, I'm going to save all my pictures, but they're going to keep taking a smaller and smaller form factor and fit in tighter places. And there's certainly benefit to the service provider, right? Like the ability for me to put it in the cloud and hold it there rather than, I bought one of those, it was called IBI, EB drives, and I was going to put all my pictures there so they were local and I could get to them. Yeah, but the syncing was hard and making sure it was always plugged in, and because my son would unplug it to plug in his PS5. And long story short, that's not going to happen. So the cloud is there, but the problem with the cloud, and a shameless plug for one of our companies, the problem with the cloud is the cloud data, when it's at rest, it's encrypted, but when it's not at rest, it's unencrypted and it gets stolen all the time. And stuff that you want private gets released, and that is negative. And so these guys like Niobium, the idea of an encrypted cloud, that's gonna happen. And when it happens, that is a gigantic, gigantic TAM, because every chip that isn't capable of doing fully homomorphic encryption just won't be worth anything anymore. So it's this incremental movement of the tech. And, the guy who really nailed it to the point you were making about the need for more memory, for more stuff, was Michael Dell, right? He built Dell, and it's a pretty good company. And then he's like, all this data has got to go somewhere. EMC. Yeah, EMC. So, that has been a rocket ship. And it reminds me of, all things always come back to Michael Saylor. And I'm just kidding around. But this one does. Remember, when the internet kind of came into being in 1991, and there was this thing, and maybe we were going to use it. And Katie Couric was like, what is this internet thing? And what's that @ symbol? And people were like, yeah, maybe I'm going to use it. Well, Michael said, the internet is pretty cool, and it's probably going to be here, and the English language is probably going to be here. So while all the companies like changed their name to .com, pets.com and bandwidth.com and stocks went crazy, he bought up, right? He was like the original GoDaddy. He went up and bought up all these domain names, hope.com and love.com and just a whole bunch of them. And he just sat on them. And he ended up selling them for a lot of money. And I think hope.com he sold for like, $10 million that he bought for, $100. But the one that is the best is this guy from crypto.com, the CEO of crypto.com, just paid, I think, $69 million for AI.com. And the rumor was that this kid had bought it for, a few $1,000s. It's not true. He actually bought it for 11 million, which is still, 6+X. So that's still pretty good, but it's not as good as paying a few $100 for it. But you think, well, why would anyone pay for that? Because how you route things and how you organize things and how you grab people's attention matters. It's brands, right? We're loyal to brands. We're loyal to places. Like we go to the mall. We go to where our favorite restaurant is. It's you're wearing black, not just for the Tar Heels, but also for Meta. Meta shut down this week their metaverse, right? And they spent, I think the number is $75 billion, or maybe it was 85, on this project. And they shut the whole thing down. And they took down, and so the virtual real estate. And there are people who spent lots and lots of real dollars buying virtual real estate in the metaverse, in Sandbox, in lots of other things. And they're like, I'm going to own the future because I'm going to own Main Street in the digital universe. The problem was the metaverse isn't, or at this point, isn't one. You could have multiple, right? Meta could create one and someone else could create one and Sandbox. And that doesn't work because what you need is literally a digital twin of the whole world. And not everything goes back to, but everything does go back to Pokemon. Pokemon is the thing that binds. And the company Niantic, right, that owns Pokemon Go, is actually sitting on what might be one of the most valuable assets in the world. So they just announced that they, through people like me, right, who walk around with their camera, with their phone, playing this game, taking pictures of stuff, they have created a three-dimensional interactive world map. Like think Google Earth on steroids, from 34 billion individual pictures and videos that members gave them for free. Actually, they paid them. Like we pay Niantic to play the game. I mean, it's a free game, but then you got to buy stuff to make it better. That is unbelievable. And so now they have this digital twin of the whole world. And New York City is always going to be New York City. And Paris is always going to be Paris. But if we have virtual New York City and virtual Paris, could the virtual real estate in that world be valuable? That's an interesting thought.
Yep. And of course, Mark, Facebook was quick to comment to stop the bleeding on the stock price and said, no. We are not necessarily shutting down the metaverse. We are just not expanding new games, and you can continue playing the existing game, Horizon Worlds. But the 1,000 employees that are part of this division, yeah, they're gone. So yeah, nothing to see there. So they blame this on sort of a misinformation, but we kind of can read between the lines. But Mark, I wanted to hear your thought on this kind of last story before we go into the chart of the week, is this idea of Jeff Bezos trying to basically, in my opinion, become Masayoshi Son. You heard about this, where he is trying to create a $100 billion vehicle for the purposes of, massive acquisition strategy tied to his AI venture, Project Prometheus. Nothing to do with the terrible Alien prequel, but just cozy coincidence.
I mean, it's just a coincidence. I'm sure it's a coincidence.
Exactly. I don't think that Project Prometheus will have any of the same doom fates as the movie, trying to live up to the legend that was original Aliens with Sigourney Weaver and amazing, visual concepts back in the 80s. So, the idea is that exactly, right? The idea, Mark, is that they're going to use AI to try to modernize industrial operations, right? So that's going to be things like aerospace and semiconductors and defense, all the things that are in vogue. We're also have identified some of these things with our projects. Another shout out to KHA, Kraus Hamani Aerospace company that we have been on for some time, is now this autonomous drone company that creates mesh networks using these long range flight drones. So it could be very helpful for peacekeeping efforts or making sure that things kind of operate more smoothly in combat zones. But Bezos, I thought, was interesting, Mark, because I know you are a huge follower and admirer of SoftBank and Masayoshi Son. 100 billion, same amount as the Vision Fund, the same kind of large investments. Will Bezos find that Yahoo Alibaba serendipitous moment, which makes us all forget about the failures? We'll see. What are your thoughts on this?
I have so many thoughts. So look, there's no debating that Jeff's vision has been extraordinary for e-commerce. His other stuff, like Blue Origin, I'm not a fan. Fake rocket ship launches with female. I mean, really? I mean, it's anyway. It should. I'm not a fan. The idea that we need him, who seems to spend most of his time now posing with girlfriend, wife. I don't know if they got married. Yeah, they did get married. They got married in Venice, right? So his new wife. His new wife. Yeah. He spends most of his time mugging with her on the red carpet. Whatever. I don't really understand it, but I just don't. I don't think we need a $100 billion fund to do the work that's already being done by smaller entrepreneurs and businesses that, size is the enemy of alpha. The Vision Fund has produced horrible returns. Yeah. And look, I am a big Son fan. I mean, Masa-san has been incredible. Now there's a whole lore of why it's not good and why it's ugly. And you can go down a deep rabbit hole on that if you want. And you can go down a deep rabbit hole on Jeff and his aunt and a whole bunch of other things and connections to stuff that we'd rather not think is real, which probably is real. So, and I don't mean Israel, but is real. But the Freudian slip. But look, I struggle with why a small number of people, and you can put Sam and you can put the Andro people in here, and you can put the, and they all do come back to Peter Thiel somehow. And there's a deep rabbit hole on that one. So and Elon too, there's a deep rabbit hole in that. So I struggle with why governments, essentially these are like government agencies, get behind these certain individuals. Now, maybe it's because we all need heroes, right? You talk about Mellanox and how great it was. They got bought for $7 billion and they made $11 billion in a quarter, $31 billion in a year. Yeah. The last company that was like that was Marvel, right? The comic book. So when Carl bought that thing for $6 billion, everybody was like, you're an idiot. $6 billion for a comic book company. One Spider-Man movie did 6 billion. One. And so there have been multiple Spider-Man movies and multiple other movies. And so that was one of the great investments of all time. And so when you have an asset that can generate other assets, that's what you want. This idea that we need, these big companies like SpaceX and OpenAI, and I'm just not a fan. So I don't think this is going to produce good returns. I wouldn't put money in it. Now they're not asking me to put money in it, but I'm not going to put money in it. The people who put money in it will be the same ones that put money in Masa's big fund. Saudi Arabia and other big, and again, that's just a political thing, morass. And anyway, that's a long way of saying not a fan.
Yep. But it's also where the money is too, Mark, right? Because at that size of the fund, he's not collecting 100K minimums, right, to manage, and nor
do they really care what I think, because they're not in it. They're not in it for why we're in it. Like, we do this right. job because we love backing founders, because we love interacting with technology, because we love putting capital to work and making, multiples of capital. That's not what these things are about. These are political weapons, and I use that term intentionally. They are weapons, and they allow governments to steer policy by gaining control of said technologies. And this is not new. I mean, if you look at the foundations of just about every technology, major technology innovation, they're all government backed early, and then there's a little piece that goes off. And so in my mind, the way to do this would be, let's do it for the government, for the people, right? Let's do what Temasek and government of Singapore do, where they take their Social Security money and they use that to make these investments. Not a personal individual, who's highly connected and making political contributions, not somebody who's funding political candidates. Why should Jeff get that benefit, and Jeff and his people? Why not have that be a U.S. government asset? And why don't we make Social Security not a pay-as-you-go system, but actually make it a functioning insurance company, which is what it is. That would be the way to do it. And why not then invest in every innovative company and technology that's coming out of the US, and not take money from our enemies or frenemies. Anyway, but I digress.
Well, you heard it here, folks. USCO for 2028. We said, I know, Mark, you had a chapter 4 that was already laid out. I like the idea, but I think that was quite a stump speech. But we will transition then onto the section where it is worth 1 million words. If we're thinking about Microsoft, it is worth 2 billion
parameters.
2 billion parameters. And this, Mark, is a extension, a revisit of the idea of the Bitcoin market, in particular, what it looks like for bearish sentiment, and kind of unwinding a little bit of some of the put option strategies. And I thought it was very interesting where some of these marks are, and it kind of ties to some of the ideas of, well, how low can it get, and what does that mean for people's sentimentality? So I will share the screen and make a brief comment. Reminder to listeners, always, we do this thing on YouTube. You can see the chart of the week and the Bitcoin stock review
and
the all
alien
the fun happenings
Easter egg this time.
Over there.
We got an alien Easter egg.
That's right, alien Easter egg, exactly right. So, Mark, you will see here open interest by strike price, and kind of the interesting call here was that the 20,000 put option on Bitcoin has become the third most popular strike, and that's got nearly 600 million in notional value, which is kind of, signaling a increased kind of fear around the extreme downside. I think we mentioned before, how bad could this market get? We had some ideas that, maybe we're kind of nearing and leveling off in the 60K mark, but there's some that, kind of randomly predict even lower than that. 40K, 20K mark brings us all the way down to the last kind of lows that we experienced, in the pre-FTX days. But it also kind of signals this bit of a shift, Mark, because we have seen this kind of wide dispersion as we're seeing people sell deep out of the money puts and just wondering how much pain could they endure as we kind of, rally them into the 70s mark.
This is an amazing chart. And it just proves the point, right? Options are not for the faint of heart, and they're not for the average individual. The problem with options is the people who make money in options are the people who sell them, right? So if you ever have an urge to buy an option, stop and do the opposite. And what I mean by that is 85% of options expire worthless, meaning you bet that the market's going to go up, it will go down. You bet that the market's going to go down, it will go up. So here you can see at the beginning last year that everyone was betting that Bitcoin would go up. They were buying calls and then the market crashed. And so now they're buying puts. And that is a really good sign that we're probably, if not at, maybe past the bottom. And the people who sell the options or the people who trade the options, Ken Griffin gets rich no matter what you do because they all have to trade through his market makers. And, again, Ken, I'm comfortable saying that he is the smartest person I've ever met, ever. I mean, the guy is amazing. And the thing that's so amazing about him is a joke. He's better lawyer than his general counsel. He's a better accountant than his CFO. He's a better trader than all his traders. He's just better at everything than everybody. And he saw 20 years ago that, options are a horrible investment. Like if you actually buy them, if you write them, you can make lots of money. But where you really make the money is being the arms dealer, right? Is just letting people, do stupid stuff and buy options. And so he created this very large market making business and Citadel Securities, and he has minted it. Incredibly, incredibly profitable. And he's done a lot of things that are really good. But I love the fact that whatever the current direction of price, people will load up on options in the same direction because they think that the trend will go on forever. But that's not the way the world works. And human emotion is such that for whatever reason, investors like to light money on fire in the options market. So listen, if you ever have the urge to buy a call, just buy a put. If you ever have the urge to buy a put, just buy a call. Right. And here, I like this. It's good.
It's also pretty interesting, Mark, because if we kind of sum all this up, you are seeing a little bit more of a bullish market structure, right? You're seeing, inside the numbers, it's got, there are more calls than puts, 0.63 put call ratio. And then also, what's the top derivative contract on this? Well, that would be 125, right? So basically, folks are saying, nothing to see here. This little dip in the market is over. Bitcoin cyclicality, that's in the rear view mirror. And we're just going to be green candles from the rest of the way here. That's the sentimentality of the folks that are kind of at this tippity top here. And then, of course,
wait a minute, X,
biggest,
holy moly, bad eyes here.
Yeah.
I did it exactly backwards. This is really interesting. So it was puts in yellow and calls in blue.
Mm-hmm.
So
exactly.
Yeah. And what is that date with that big spike right there with the arrow?
Okay, so we're seeing the max price gain here is 75,000, and we have on the y-axis, this is kind of the prices in 12,000, 10,000, 8,000, and on the bottom here we're seeing that Bitcoin price. These are kind of the numbers of open interest, and then this is just
I'm sorry,
the date range and actual Bitcoin.
Again, bad eyes. I thought this was dates. So
it is.
Okay, no, my bad. So again, I think the the interesting thing here is, back to my original point, whatever people are doing in mass, you want to do the opposite when it comes to options. So here, what we see is the blue lines mean there are more calls struck at higher prices.
Mm-hmm.
Yeah.
Correct. So we're seeing here that these are the call options kind of above where we're trading. Higher means more contracts. So we have the highest here at 125, followed by right where we're at here at 75,000. But then you see that the third largest is, well, this whole thing is going to crater. It's not zero to our prior point. It's 20,000 on kind of the open interest right now. And as we've seen how much these derivative contracts affect sentimentality and prices, and we talk about those monthly liquidations a lot and how that, resets the market. So this is kind of all over the place.
And so I apologize. I thought this was a temporal analysis. So the reality here is exactly, both of those large groups of options are likely to expire worthless, right? It is highly unlikely that we're going to 125 anytime soon. And it is highly unlikely we're going to 20 anytime soon. So those are probably more likely large hedging positions against opposite long positions. But what I do think is a little disconcerting is in that middle zone of more likely where the price is. There's still more calls than puts, which means we're probably not out of the woods yet. What we need is those yellow bars to spike at the current price. And it's getting close, right? You can see that right in the middle of the chart. It's getting close. You got that one bar right in the middle there where the yellow is above the blue, but then the one next to it, 3 over, the yellow's still below the blue. And that...
Yeah, Mark, I'd be curious also to see how this aligns with political sentimentality, because it seems a lot like where, not to talk too much about politics, but a lot of where we see, you're extremely loaded on the tails, and then there's this kind of group in the middle that's just trying to push for just getting stuff done.
The short term issue with that is that one large bar on the left that still calls, that's only down maybe 15%. Those people are, I still think, going to lose money. And so could we have one last little, flush back into the 60s? Certainly possible, but I think, to step back in the big macro, very, very likely we're going to have a recession based on this, higher oil prices, or they're going to be higher for longer. Probably not going to get them down before the midterms, which means the midterms are going to be a wipeout for the Republicans. Remember that just gas price and presidential popularity are just inversely correlated. So all of that leads me to think that the Fed, despite, Jerome kind of sticking it to the man by saying, no cuts for you. When Warsh comes in, he might jump on the bandwagon of cuts.
Yeah. Well said. We'll definitely be watching this closely as we do every week. We want to thank everybody for logging in, subscribing, liking, engaging with us. We do this once a week on Fridays, and we want to also wish everybody well in their March Madness bracket.
All right. Thanks, X. Have a good one.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.